So what if I told you a biotech company could make $1 billion without selling a single pill? Today, we're diving into a story that's right at the wild intersection of healthcare and high finance, and it all centers on one company's absolutely mind-blowing earnings report. Meet Enlivex Therapeutics. At first glance, they look like your classic biotech firm, right? They're in the lab, they're working on treatments for things like knee osteoarthritis, a very noble goal, and frankly, pretty standard stuff for a company in this field. But as you're about to see, the word standard really isn't in their vocabulary. Because this is where the story gets crazy. In 2025, Enlivex reported a net income of $1.23 billion. Now, for a company that's still in the clinical stage, a number like that is, well, it's pretty much unheard of. That's the kind of money you expect from a massive global pharma giant, not a smaller research-focused firm. And here is the real kicker. Not profit didn't come from some blockbuster drug. In fact, Enlivex hasn't even brought a product to market yet. So that begs the billion-dollar question. How on earth did they pull this off? Where did all that cash come from? Well, the secret isn't hiding in a petri dish. It's all about their prediction market engine. You see, the answer to their billion-dollar profit isn't in their science. It's buried deep in the company's balance sheet, inside what they call their treasury. This is a totally different kind of machine driving the company's value. So here's the bottom line. That $1.23 billion wasn't revenue from sales, not a single cent. It was all from a massive jump in the value of the financial assets the company holds. They basically made their money by investing, not by selling anything they developed in the lab. Okay, so what in the world are prediction markets? The easiest way to think about them is like a stock market, but for future events. Instead of buying shares in a company, people buy and sell shares in the outcome of, well, pretty much anything. An election, a sports game, you name it. The market price then reflects what the crowd thinks is going to happen. It's a really cool way of tapping into the wisdom of the crowd. And Enlivex didn't just dip their toes in. They went all in on one specific part of this world. Their entire treasury strategy is built around a digital asset called the RAIN token. This token is the key to a decentralized prediction market, and it's the heart of their entire financial strategy. All right, so let's pop the hood and take a look at this RAIN token. How does a digital asset like this actually generate real-world value? And why is Enlivex betting the farm on it? Let's get into the mechanics. The company actually uses a pretty brilliant analogy. They call the protocol behind RAIN the TikTok of prediction markets. And it makes sense when you think about it. The idea is that it's global, it's decentralized, and it's super scalable, letting literally anyone, anywhere, create a market for just about anything. This creates this huge long tail of super niche markets that normal platforms could never support. Okay, so this is the engine right here. This is the core value driver for the RAIN token, and it's a simple but really powerful four-step loop. First, all the trading on the platform generates volume. Then, a small 5% fee gets taken from all that volume. Step 3, half of those fees are used to buy back RAIN tokens right off the open market. And finally, and this is the important part, those tokens are burned, which means they're permanently destroyed and removed from circulation. So what this does is create a really direct economic link between how much the platform is used and how much the token is worth. The more people use it, the more tokens get burned, and the supply of RAIN shrinks. It's classic supply and demand, you know? As the supply goes down, the value of the tokens that are left should, in theory, go up. And that's the dynamic Enlivex is betting big on. So, you might be asking, how does all this financial wizardry fit in with a company that's supposed to be curing diseases? Well, they call it their dual engine strategy, and it's this really fascinating blend of biology and high finance. It's like the company has two sides. On one side, you've got the clinical engine. This is their traditional biotech work, developing drugs, running trials. This gives the company a biological floor of value, meaning it has real, inherent worth because of its science. But then you have the treasury engine, which is designed to be a wealth span creator, growing the value of their financial assets. One is about extending our actual lifespan, the other about growing our wealth span. And here's where it all comes together. Biotech research is ridiculously expensive. Companies are constantly having to raise more money, which dilutes the value for their existing shareholders. Enlivex's big idea is to use the profits from its treasury engine to pay for the work of its clinical engine. If it works, they could break free from that endless fundraising cycle. And make no mistake, the company's leadership knows this is a big swing. Their executive chairman, Shai Novik, put it bluntly. He He said they're building a new institutional archetype, a whole new kind of company that captures value from both scientific breakthroughs and new financial technology. So, the big question is this a genius new model for the future, or is it just an incredibly high-stakes gamble? Let's take a look at the very real risks and how the market is reacting to all this. Because here's the thing. Even after posting over $1 billion in profit, the company's stock hasn't exactly gone to the moon. There's a huge disconnect between the numbers on their balance sheet and how Wall Street values them. And that tells you one thing loud and clear. Investors are skeptical. And, they have some pretty good reasons to be. And here's why. The risks here are massive. First off, that $1 billion profit, it's an unrealized gain. It's on paper, based on the value of a super volatile digital token. Second, there's absolutely no guarantee they can repeat these kinds of gains. It could be a one-time thing. That's why their stock is trading for way less than the assets they claim to have. The whole model is completely at the mercy of wild crypto market swings, and of course, the looming threat of regulation. So we're left with this incredible question. Is Enlivex pioneering a totally revolutionary new way to fund critical, life-saving research, using financial innovation to solve biology's biggest problems? Or is this a fragile house of cards built on a volatile asset class, a cautionary tale just waiting to unfold? The answer could honestly redefine how we fund the future of medicine itself.